What if interest rate is reduced in the next quarter, and will it affect retired people and other insurances as an investment? So this is an interesting topic which I'm going to share because on April 1 there was a rollback of the interest rate, savings interest rate by our finance minister. The story behind it and how it will affect you at least in the next immediate quarter, maybe 3 months down the line. So let's look at that perspective in today's video. Thank you so much for watching. Please click the subscriber button so that you're not missing interesting things like this. So hi, hello, this is Ganesh Through your stock market profit coach, and I help you in multiplying your money by investing in stock market. This is my book, one page stock market plan, which will help you in planning to invest in stock market with just one page plan, so that you're not missing anything and you are going on with full knowledge about stock market. So there was a flip flop. Okay, because on 31st late night it was said that interest rate is getting changed by the next quarter, and it is with immediate effect on midnight of 1st April. Generally, this is a process for every quarter. This will happen, and either the interest rate will be same or it will be reduced by a marginal level. But if you look at the last 1 year, the bank deposit rates has been reduced. RBI has kept the interest rate at very low level, which means that uh, even the GSEC, the government securities had gone down, all the interest rate deposits had gone down, and but still some of the interest rate has not been reduced, which is post office related things, post office deposits, Kisan Vikas Patra, PPF, as well as Sukanya Samriddhi scheme. All these schemes are reached, I mean, across India, many people are investing, and many are dependent on these things, and especially senior citizen savings scheme by post office. Many senior citizens from government offices are depositing, and they are utilizing this thing. But coming at this juncture, what the government did is on 31st, they did as usual. They just posted that. Let me show that this is the interest rate. Okay, this is the savings deposit rates 4%. This is the exact current rate. And what they said is on April 1, they will reduce it to 3.5. And just look at the 1 year time deposit. Fixed deposit is will be reduced from 5.5% to 4.4%. And if this has been given, all the banks will reduce interest rate one after the other. So it will be a huge big thing for all the retired people. And just look at 5 year recurring deposit, it has gone down to 5.3%. And senior citizen savings scheme from 7.4, it will be brought down to 6.5. And just think of if it has been implemented, it will be a huge problem for all the senior citizens as well as people who are investing in insurance. Let me say it one by one. And just look at Sukanya Samriddhi scheme. As of now, it is 7.6, and the expected is 6.9. And just look at the public provident fund scheme. From 7.1% right now, it will be brought down to 6.4%. 6.4%. And as well as Kisan Vikas Patra, the interest rate is getting reduced, as well as a term is getting increased from 124 months, they are increasing it to 138 months. What is this signifying? In the next quarter, maybe right now they are rolling back to current deposit rates. Whatever in the first column is going to be there from 1/1 to 31/3, it will be continued for the next one quarter. But in the next quarter, this will be the new rates. Why it will be the new rates? Because the elections are getting closed, and government cannot keep on giving the higher deposit rates for post offices and insurance when the current bank deposit rates are very very low. There is a huge difference. Current bank deposit rates are around 3.55 to 4%, and the deposit rates are being given at 5.5. And whereas the post office, the deposit rates are even close to double the returns, right? So this government cannot withstand. So because of these reasons, this rollback is temporary. It may be for a quarter. Are you all ready to for a next big jump? So you should be ready. And what is the consequences of retired people? Just look at, as of now itself, if you look at, let's take the senior citizen scheme, 7.4%. If you have 1 lakh rupees, if you are invested 1 lakh for a year, you will be getting around 7,400 rupees. That is the case. In case of PPF, the returns are, it's long term, 7.1, and Sukanya Samriddhi 7.6 is long term. Let's look at 5 year time deposit, which is around 6.7%, and senior citizen scheme is around 7.4, and MIS scheme is around 6.6%. What it means is that for every 1 lakh, you're just going to get 7,400 rupees. At this juncture itself, it's very, 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 very low. And maybe in the next quarter, maybe in the next 3 to 6 months, it will be brought down even further. That 5 year time deposit is going to be around 5,800 rupees for 1 lakh rupees in a year timeline. And MIS is going to give you just 5.7%. And just look at KVC, Kisan Vikas Patra 6.2. So what I'm trying to say is, as of now, the current rate itself is very, very, very low, and in the next 3 to 6 months, it is going to be even dipping by almost like 1%. They are bringing it down, and I'd say why they are bringing it down, because they think that inflation is already under control. According to the economists, the inflation is around 4 to 5% as of now. Even if it increases, it may be around 6% in the next 6 months. But the point here is that even though the inflation is high, the inflation is around 4 to 6% as of now. And but the lifestyle inflation, the way we spend money, the way we spend money for mobiles, broadbands, and all these things, and the way we spend for petrol expenses, all these things, and the taxes, GST, and everything which has increased, all these are putting down our total expenses, total inflation, not just 4 to 5% or 6%, it will be close to 10%. And whatever you're getting in the post office and all these time deposits is just around 7,400 rupees, 7.4% returns as of now. Okay, so in the next 6 months, it is going to be coming down by another 10% from the current deposit rates, which will be very impossible for anyone to survive, even with the pension, whatever you have been getting. The last 10 years, from 9% returns, it has 9 to 10% returns, it has been brought down to around 7%, and in the next 6 months, it will be brought down under 6% or close to 6%. That is the case. You have been falling short for the last 5 to 10 years by a huge margin. So your expenses you need to curtail, but whomsoever you are, whether you are a millennial, Gen X, or whatever, even if you are in a retired 60, 70, or 80, the amount is the pension amount, whatever the corpus is same. Maybe you may be having 1 crore, but whatever you are receiving per year, from 10 lakh rupees, it got down to less than 7 lakh rupees. 3 lakh shortfall, whereas the expenses, whatever you have been making in the last 5 to 10 years, has increased like anything. So during this scenario, what you need to do, you should be very cautious whether you should shift and put it in some mutual fund so that you are balancing out the losses, as well as that is really really necessary. Whether you are going for stock market or not, it's your choice, I'm leaving it to you. But you need mutual fund things, and you can implement SWP, systematic withdrawal plan, so that your equity appreciation is there, as well as your fund is getting you are getting much more bigger returns over a period of time, right? This is one choice for retired people. And the second choice is for insurances. Just think of LIC and other insurance, they will give you a guaranteed scheme. LIC, HDFC, ICICI, everybody are having a guaranteed scheme, saying that any insurance schemes, if you go, they'll be giving you either 4% or 6%, 6% interest rate. Yes, 4 and 8% interest rate. And generally, it will fall in between around 5 to 6% is what all the whole life insurance, endowment insurance policies will be coming into, will be projected. The projections will come around 5 to 6%. Actual will be around 5 to 6%, whereas the projection, whatever before taking the policy, they will be showing 4% policy and 6%, 8% returns. Right. So in this now, even that 4% will be really difficult, as the bank deposit rates are coming down. Automatically, these returns will also come down in the next 3 to 6 months immediately. And the people who have invested in whole life policy for the last 5 years, or who are started investing in the last 2 years, or maybe in the transition period of 5 to 10 years, you'll be getting around less than in and around 4% only. In and around 4% only. Are you happy with 4% returns for the next 10 years, 20 years? Just think of, it's a secured money. This is what most of the people are asking me. Anyway, it is a secured money. Can I go and invest? Just go and invest. Secured money, but whatever you are going to get is less than, far less than inflation. And say you deposited 10 lakhs, at the end of 20 years, you will not be getting 20 lakhs. You will be getting around 15 to 16, 17 lakhs at the max. If you are happy with this kind of returns, just go and invest. But that's a choice which will be really difficult for me to. I will not ever accept for that kind of investments in my life, even if I am at 80, right? So just think of whether it is okay for you to go on with these kind of policies, and go on with these kind of returns. It's a huge warning given by our finance ministry on April 1, because it's April Fool Day. It's kind of April Fool Day, they said, but it will come for sure in the next 3 to 6 months, because there are a couple of elections going on in Tamil Nadu, Kerala, as well as West Bengal and Assam. Four state elections are going on, which is every election is crucial for them. They do changes only based on elections, as far in the last few years we have seen. So any government, it's not only BJP, any government will do that. In that scenario, just think of what will happen to the interest rate in the next 3 months. For sure, it will be reduced. Uh, So you need to change your returns, you need to change your deposits. It doesn't need to be fixed deposits alone, it need to be in different assets, right? In different asset class, mutual funds, gold as an investment point of view. And similarly you need to do, if you're happy, if you're fine, you can go ahead and invest in these kind of things. So thank you so much for watching. If you have any questions with respect to this particular topic, kindly post it in the comment section. I'll be happy enough to answer your questions. Thank you so much for watching.